Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, it was a pretty choppy one across the board. Relatively slow, fast, bursty moves, but not really a whole lot of consistency, except for the shining example of the bonds. Now, the bonds actually moved almost as much as the euro did in the same period of time, which is saying something, right? We were looking at the amount of movement that we had. The bonds were putting in about 28 ticks at the time, and euro was stuck in a 27 tick range. So for a little bit of time there, the bonds were actually more volatile than the euro, which really goes to show you how today went overall. Now, we started off with a gap completely above all of Friday, right? All of Friday gapped all the way above it, and a very weak bull candle to start the day off. Now, whenever you have that type of scenario, there are going to be a lot of traders who are looking to fade that gap, especially considering how weak that first candle was. But then the sellers never really showed up, right? A decent amount of weakness there, and then a doji. We really weren't getting a whole lot of conviction on either side. And then we finally got this candle right here, and that kind of sealed the deal for the sellers. That gave them a reason to become sellers and slam the market down to attempt to get that gap fill further down to fill that Friday move and get back inside of Friday's range. Now, that was the first attempt down. Now, if you didn't want to take that one because of the first attempt down, I like taking the next one as well. But either way, there's a good reason to become a seller here to drive the market lower to fill that gap on that weakness of the move up. Then we get a small little bounce. More likely, given the overall breakout momentum, sellers are going to sell into the bounce for another nice re-entry to drive the market back down and finish the job off. Now, after they finish the job, right, they filled the gap right there, and you can see a huge amount of profit taking place right there. Not really that much of a surprise. That was kind of the main goal. But then they slammed underneath it again. Right, so we're seeing the sellers not quite content with just taking profit at the gap. It looks like they're going to want a little more. Now, that sell breakdown goes into a doji, into weakness, into a strong bear, no follow through. So we're not getting big clues here. But when the buyers try showing up, they find resistance right at the area of support, right? Once support turns into resistance, and that gave one more drive back down to a new low. And at that point, going forward, it's a little too choppy to continue trading, so that's kind of where I figured to call it. It's just not worth the risk anymore. But still, just a phenomenal day of price action for the bonds. I wish everything else kind of followed in step, but well, beggars can't be choosers, right? So that's going to do it for this one. Great combination of market psychology in terms of both the psychological aspect and the overall technical aspect. You have a gap, weakness, right? That's going to disappoint the buyers, and they're going to look to exit, and then you get the drive lower. If you have any questions about it, as always, you can send me an email, jbrink@slingshotfutures.com, and we'll see you in the next one.